These days, lots of factors are making it harder to buy things. After paying out for rent, utilities, gas, groceries, and other monthly bills, many of us have very little money left for extras. Some of us are even saving it for a rainy day. This is having an impact on big companies across the U.S. who are seeing their sales, profits, and earnings all go down. The past 2 years have been particularly tough for them, with the pandemic, supply chain issues, inflation, and soaring commodity prices, making matters even more difficult. As we enter the festive season, they face some tough decisions. With the economy continuing to decline, many large companies such as McDonald's and Disney have made the decision to close some of their stores in order to save money and remain in business. In this video, we'll discuss the multiple industry giants that have announced plans to close dozens or even hundreds of their locations. Before we begin, if you haven't subscribed yet, please subscribe to our channel and hit the bell icon to get notified of our new videos. Walt Disney. The renowned movie-making mega brand is undergoing a significant restructuring process due to a 40% decrease in share price this year. As a consequence, former CEO Bob Iger was reinstated. The pandemic and increasing costs compelled Disney to shut down 61 stores in 2021. Additionally, their online business saw a dip in the fourth quarter that same year. Their streaming services reported a $1.5 billion deficit, and with people limiting their spending in 2022, the brand was unable to recover. In the U.S., an additional 60 stores are currently in the process of being closed, making it a total of 119 stores over the past 2 years. After the completion of the cuts, only 23 Disney stores will remain in the country. The conglomerate is now focusing on its digital platforms and social media presence. 2. Pier 1 Imports. In 2020, Pier 1 Imports declared bankruptcy and attempted to save the company by closing 450 stores. Unfortunately, the pandemic, the worst shipping crisis of modern times, and months of port congestion prevented them from emerging from Chapter 11 protection by 2022. With consumer spending slowing, the retailer was forced to close their last 492 stores, resulting in a total of 942 closures in the last 2 years. 3. Sally Beauty Supply. Sally Beauty, the retail chain headquartered in Texas, with more than 4,500 stores and distribution centers in the U.S., announced this week that 350 of its stores will shut down by the end of the year. This follows a drop in net sales of almost $20 million during the last quarter. According to Business Insider, Sally Beauty attributed the decrease in sales to inflationary pressures that are impacting consumer spending habits and supply chain issues. 4. Microsoft. Microsoft experienced a surge in sales during the pandemic due to the widespread use of their software for homeschooling and virtual schools. Despite this, the company was held back by its real estate obligations, impacting its balance sheet. In light of this, Microsoft has decided to close its remaining 70 stores in the U.S. and shift to an exclusively online sales model. 5. L'Occitane. Due to the holiday season of 2021, the renowned French beauty store saw a sharp decrease of 56.5% in in-store sales. With the disappointing earnings, leaders of the company had to devise a plan in order to emerge from Chapter 11 bankruptcy. As a result, 23 of the 166 stores in the U.S. will be shutting down, and the beauty brand will reduce its number of stores in the U.S. to 133 by 2023. 6. CVS. Both Wolverines and CVS are facing similar obstacles. According to Neil Saunders, the managing director of Global Data, many CVS stores are outdated, with inadequate lighting, dilapidated interiors, untidy merchandise displays, and a limited selection of products. This will bring the total number of store closures to 900. The remaining stores will be able to receive more funding and bolster its expanding online presence. In recent months, CVS has been shutting down stores in Falls Church, Virginia, Fresno, California, and Johnson City, Tennessee. A representative from the company noted that the closures will help the organization establish a new retail footprint strategy that can better suit their customers' changing needs. 7. Bath & Body Works. L Brands, the parent company of Bath & Body Works, has announced that 50 of its U.S. stores will be shut down by the end of the third quarter in 2022. Furthermore, the firm intends to reduce its corporate workforce by 130 positions to reduce expenses amid the increasing cost of inflation, supply chain, and transportation. 8. Gap. Recent issues, such as those connected to rapper Kanye West, have been damaging to Gap's profits as the holiday season approaches. According to Forbes, a new clothing line called 𝐦𝐨𝐬𝐲 provided a slight increase in sales last year, but the gains dissipated shortly after. This is because customers found the clothing overpriced and uninspiring in comparison to other fashion brands, including Zara and Nordstrom. In October, Gap announced that it would be closing 30 stores by 2023 in order to have a smaller, more successful portfolio of stores. The majority of these locations will be in malls. Gap President and CEO Mark Breitbart commented, "We have relied too heavily on stores that are not producing enough earnings. Over the past 6 months, we have been working to resolve our property issues and hasten our transition to an actual on-the-channel model. As a result of this decision, 220 Gap stores will soon be shutting down for good." 9. Chipotle. Many people still go to this chain of restaurants on a regular basis, but not many of them know that Chipotle has been going through a hard time, with major labor problems, falling sales, and supply chain problems. Chipotle is closing 65 restaurants for good. Lori Shallow, Chipotle's Chief Corporate Affairs Officer, said in a statement, "It's been hard to find managers who want to leave and hire new staff to keep the doors open. Because of these ongoing problems with staffing, there's no chance of reopening in the near future, so they've decided to close the locations for good." 10. Walgreens. Walgreens, a leading pharmacy chain, has recently experienced a shortage of essential medications such as antibiotics, allergy pills, anti-inflammatory pills, and antivirals due to issues in the supply chain. As a result, Walgreens is taking the initiative to close stores that are not performing well, as the shortages have had a negative impact on sales. To save money, the chain has already closed 4 stores located in New York, Florida, Colorado, and Massachusetts, without giving any prior notice. MoneyWise states that this is part of a bigger plan, which will eventually lead to the closure of over 200 stores in the long run. 11. GameStop. Last year, GameStop, a struggling video game store, became a major talking point in the stock market and the media due to a group of investors attempting to prank hedge funds who were betting on its failure. However, it doesn't seem that anyone ultimately benefited from the prank. As revenue and sales have been declining, the gaming retailer has been forced to close hundreds of stores over the past 2 years, and by 2021, a total of 1,000 stores will have shut down. With an increased focus on online operations, an additional 557 stores are currently undergoing clearance sales in order to close. 12. AT&T. According to John Stankey, CEO of AT&T, the world's largest telecommunications company by revenue, has announced the closure of 250 stores and the loss of 3,400 jobs as the company repositions its slumping wireline business segment in the face of the current economic downturn. This downturn has not been limited to only clothing, homeware, and pharmaceutical retailers, but has impacted AT&T as well. 13. Best Buy. In recent years, the electronics store has closed a total of 80 stores and laid off over 2,000 workers. With problems in the supply chain and a lack of employees, the company announced in 2021 that it would be cutting down its lease lengths and discontinuing subsidies for many of its physical stores, potentially resulting in another wave of closures. During a third quarter earnings call, the store reported a drop in foot traffic and revealed that at least 20 more stores would be shut down by the end of 2022. As the company shifts its focus to online sales, many industry analysts believe that it may completely exit the U.S. retail market by 2024. 14. Office Depot. According to new reports, Office Depot is reportedly preparing to close more stores between 2020 and 2021 due to the pandemic-related shortages and issues with its distribution centers. In fact, the company has already shut down over 263 stores. Its most recent financial results show that its retail sales were 11% lower in the third quarter than in the same period of the previous year. CEO Jerry Smith has announced that 71 additional stores will be closed by the start of 2023 in order to restructure the company operations and reduce costs. 15. McDonald's. McDonald's, the most popular fast food chain in the world, is unlikely to go out of business anytime soon. However, the brand has been affected by the current economic downturn and is now closing hundreds of low-traffic stores. The costs of McDonald's have risen due to new health and safety regulations, as well as higher food prices that have taken a toll on their profits. According to the Wall Street Journal, McDonald's profits are at their lowest level in 13 years. As a safety measure, the company is closing 200 Walmart stores that don't get much traffic, leaving only 150 open across the country. When some of the biggest companies are forced to downsize, close their operations in order to save money, it is a clear sign that the economy is in a slump. Unfortunately, there does not appear to be an immediate reprieve from the current hardships for both businesses and consumers. Just recently, one of the wealthiest individuals in the world has warned individuals to refrain from buying unnecessary items and to store up cash for the difficult times ahead. This is bad news for our well-known brands and for the big stores that sell them. We'll keep an eye on the retail apocalypse as it continues to get worse over the next few months. Keep tuned with us and feel free to share your thoughts in the comment section down below. That's all for today. If you like this video, please give it a thumbs up. And if you want to hear more videos from our channel, subscribe and make sure to turn on the bell icon.